Welcome back to Roach Education. This is Ed. Today we're going to be talking about Opendoor.com, going with the ticker OPEN. Now this video received a lot of votes on my Twitter poll, so we're covering it today. On the last trading day, they dropped around 13.44%, and we're going to discuss it a little bit further. So first off on who they are. So Opendoor is a leading digital platform for residential real estate. In 2014, we set out to reinvent life's most important transaction with a new and radically simple way to buy and sell homes. We have rebuilt the entire consumer real estate experience and have made buying and selling possible on a mobile device. We've also served tens of thousands of customers who have come to Opendoor to make their move easier. Whether it's getting married, starting a family, yada yada, and Opendoor currently operates in a growing number of cities and neighborhoods across the country. A full view of the markets that they serve is found here, and we can go ahead as well and take a look into their operations in the quarters, but you're able to see a long list of where they serve. For instance, you're able to see Columbus, for instance, you can't buy from, or Cleveland or Corpus, but there are generally spread out all throughout. For instance, something like selling, that would be throughout everywhere, but in terms of buying, it's majority of the states. Now, the fourth quarter 2021 letter to shareholders that we see here, and we have some news relating towards that. So the big part is the key highlights. So the key highlights for 2021, their total revenue of $8 billion is up 211% versus 2020, with around 21,725 homes sold and up 119 versus 2020. Now the gross profits of $730 million, which is up 232% versus 2020, and a gross margin of 9.1 versus 8.5 in 2020. Now the net loss of around $662 million versus $253 million, so around 3 times worse, and that was primarily driven by non-cash stock-based compensation of around $536 million versus $38 million in 2020. So if you were to compare both of them, there's around $500 million just on non-cash stock-based compensation. And so that comes out to be around $162 million in loss, which would be better if it wasn't towards this massive non-stock or non-cash stock-based compensation, which is quite a lot. Adjusted net loss is a bit better, $116 million compared to $175 million in 2020. Now the contribution profit of around $525 million, which is up 377% versus 2020, which is a contribution of 6.5% margin versus a 4.3% in 2020. So an improvement in margins there. First year of positive adjusted EBITDA of $58 million versus $98 million in 2020, and adjusted EBITDA margin of 0.7% versus 3.8% in 2020. So again, that is really good news. They also purchased around 36,908 homes, up almost 500% versus 2020. And they launched the Opendoor backed offers, which provides home buyers with the benefits of an all cash offer when they bid on their dream home. And Opendoor Complete, which brings together all Opendoor's products and services into a single streamlined experience. Now, they more than doubled the market footprint to 44 markets and expanded the buy box coverage by 50% year over year, enabling us to offer an over 60% of all transactions in our effective or in our active markets. Now, the real seller conversions of over 35% along with records offers up 590% versus 2020. They also maintained seller net promoter score of above 80% and acquired Pro.com and Team from Skylight.com, leaders in home renovation technology, and RedDoor.com, a fully digitalized mortgage brokerage. So different acquisitions there. Just before moving on, just a quick things here. So revenue is up for year over year. For fourth quarter is around 1,435% up, which is amazing. Gross profits 272 versus 39 million, amazing as well. Net loss is worse, 191 million compared to 54 million, so not really well. Adjusted net loss, not really well. Adjusted EBITDA is around 0.4 million versus 27 million, so good. And their margin of break even is basically there. The adjusted EBITDA margin of break even versus 10.9% loss in fourth quarter of 2020. So you're seeing a bit of an improvement there as well. Now, they have more information about their business highlights, including, for instance, 2021 buy box coverage of total transactions of active market being greater than 60,000 or 60%, my bad, and total customer transactions being more than 140,000. Now, they also show you some more details about the revenue, increases in revenue after it dropped in 2020. It's back to be higher than what it was in 2019 for home sales and a bit better for overall revenue. Now, in terms of adjusted EBITDA, you see for the first time ever, they're going towards the positive side in a really matter of growth that really does look impressive. Now, they have other news relating towards this one and other as well, Q&A news from customers' perspective. But we want to take a look a little bit into institutions, insiders, and that kind of stuff. But taking a quick look at it, it is currently at the 52-week low. On the last trading session, it hit the 52-week low. As you get to see, the 52-week range was between 7.72 to 30.04. So it really is down at a new low. Now, institutional buyers, you're able to see that there is a bit of a mixed situation going on. So, for instance, GGV Capital liquidated around 7.33% of their holdings. So currently they own 4.010. VK Services has actually announced or declared a 3% ownership in this company. SB Investments liquidated around half, so went from 73.6 to 41.4 million shares. Price Row Associates has actually increased their number of shares from around 2 million to around 36 million. And that all happened on the 14th of February. Back on the 11th, we see Woo Eric Chung-Wee has actually liquidated 3.90 of his position, so very small. And Vanguard on the 10th of February increased their shares from around 1.4 million to $44.4 million. $44.4 million. That's an increase of around 3,000%. So that happened on the 11th and 10th of February, respectively. Now, we see as well institutional buyers appear to be mixed, generally bullish into this one and adding more of the stock. Insiders, you get to see awards and sales, so that's part of their compensation in general. So a lot of these directors get compensated as well with stock-based options and whatnot, and they get to cash them every now and then to make money. Now, in terms of valuations for this company, price over sales appear to be 0.52, which is incredibly undervalued, but this is based on TTM. I'm not sure how accurate this is, but if that is the case, SP 500 trades around 5, so it's heavily undervalued. Price over book is 1.85, which is as well undervalued, so it's at least half what the actual value would be compared to the SP 500 average. Profitability, the gross margin is positive, the rest is negative, so that could be a part of it. Hopefully, as we move forward, we're able to see better improvements in numbers. Now, before moving on towards technical analysis, if you'd like to see more contents like this, make sure to click the subscribe button and leave notification buttons on for this channel, and don't forget to drop a like. Now, let's move on towards technical analysis. Now, from a technical analysis perspective, Open has a few points that might be a bit of concern. So first off, you have the MACD, which you're able to see is continuation in increasing of negativity. So what's going on a negative side, and that magnitude of the negative histograms are constantly increasing, and that's not really good. It really shows that the negative side has gaining momentum, as you get to see by ADX. We're on the verge of it becoming a downward trend after it starts crossing the 25. It starts becoming in a downward weak trend. Above 30, it is a downward trend, and above 35, a strong downward trend. Now, other parts like the William percent R, which is very similar to the RSI or Relative Strength Index, shows that the stock is heavily oversold, suggesting that there's more sellers than buying demand. And so in case equilibrium, or when equilibrium is reached, you'll find more buyers piquing interest into this one. And the question is at what price? Now, the stochastic fast and stochastic slow are all going downwards, suggesting that there is still a little bit of potential left down to reach that bottom. So perhaps maybe at $6. We're going to try to figure this out in a second. Now, the moving average bands you're able to see are dipping downwards, not the best thing, but currently they're expecting to trade for the stock between 1060 and 867. Meanwhile, the Bollinger bands are a little bit beyond that, between the 1205 and 722. Fibonacci retracements shows a significant support at 672, resistances at 1440, 1914, 2298, 2682, 3228 and 3924. Nonetheless, there are a few resistances. I mean, the support is 672, but some resistances such as 783 that needs to be broken, 872, higher to 972, higher to 1132, and then higher to 1325, 1435, 1530, 1609, higher to around 1719, 1814, 1993, 2114, 2356, higher to around 2445, 2514. Now, from analyst recommendations, we're able to see that the average price target is around $17.50. In the last 5 days, you're able to see $15 price target was given. 10 days ago, it was $30. It's currently having a moderate buy with 7 analysts in the last 3 months, and that's 5 buys, 1 hold, and 1 sell. And so there is a lot of upside about this one. Coming to the question, Ed, what do you think is going to happen here? Well, I do think it's probably going to start stabilizing around $6. You're going to start getting in more buyers in, and then with demand, it might actually push back to around $10. But with a very shaky market, this can easily slip down to more of a downtrend, on a strong one that is. So it's very much on the borderline, trying to understand which way it would go, and my bet would be that it will first go a little bit lower before it starts pushing up higher. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day.